Good day, good folks. This is what keep us poor in real estate, the folks who try to get in. I'm going to give you a briefing of a deal that could have made a lot of money, but myself, uh, a friend of mine's, a few other investors all slipped on, and we missed the opportunity. So check this out. I'm sharing my screen. So there's a property came to me. Uh, the the property from the person that presented it to me, they basically said, hey, I'm going in this property, but it's a mess. And I said, man, you got to let me see that property. So I see the property. I say, man, this is not a mess. This is the diamond in the rough. And I go back and I say, look, if you don't know what to do with this property, I can help you. Because first off, I'm a real estate agent first, right? Probably should be an investor first, but I threw my real estate agent hat on. I said, look, what we can do is this property is not bad. Look at the numbers. We can see if we can list this thing. And so we did that. And I got my investors involved. I was excited. I fell in love with the house. Problem is, so I went and got my investors. I started out probably in a rough situation because I went and got my folks that not highly familiar with Baltimore. But here's the crazy thing that although you're not that familiar, I want to show you numbers that say, hey, I gotta make a decision, and it's a risk higher reward factor. It's sometimes stuff is just common sense, and I'm spelling this stuff out to these guys and not even realizing, like, and I'm saying to myself, like, oh man, they don't get it. You should get the deal. But I did not take the time um to look at financing to do this deal. So check this out real quick. So this is the house right here, and I listed it and ended up selling for 194,000. So let's just break this down. Initially, the conversation I had with my friends and for her to have with the seller is that they can probably sell this thing for about 165. So just off the saying that, right? And the sellers just wanted the house to go away. This is a problem for them. They have other things going on that was getting to be an expense. They just wanted the property to go away. Now, pay attention to what I just mentioned. We got a seller who's motivated, who just wants the property to go away. And you have an opportunity to look into the purchase of this property. Now, look at what I mentioned. I said 165. I could have probably got this house under contract to purchase for myself or my investors. But when I put it on the market, look at what I got it under contract for, 194. So there's a bunch of folks out there like wholesaling and all that other stuff, right? But this tells you a lot of times, like even when you're talking about wholesalers, why are you even wholesaling the deal? Find out if you have a deal under contract where you can make 20,000. I know it's hard to find the money, etc. But sometimes, and some of these people, it's not hard to find the money. They just don't do it because they don't want to get locked into the deal. But look at the difference: 165, almost $30,000. Now, here's why it became a problem to me, that the reason I'm making this video and saying, hey, this is why we get poor. We get opportunities right in front of us and we do not we do not act on them. You have to look at things, and here's the crazy thing. I'm usually thorough as a realtor. So I'm looking at the numbers. I know if I bring you in on something, I can almost bet you I'm right most of the time. 98% of the times I'm right. And that 2% is very, very, very small. Very, very small. Even with that 2%, that I'm guarantee you I can be real close. Look at these numbers. Look at this. Now, I took this back 180 days. That gives me 9 properties to look at. If I take it down to 90 days, it takes about down to like 6 properties. Now, let's look at this property right here that sold 1/10 of a mile for 158,000. Now, this property is really not a comparable, but in this condition, somebody, let's see if it was cash. Conventional financing, so it'd probably be a homeowner. So that's a little useless. But let's go back. We forget about that detached house. But look at these numbers. Now, now look at these numbers: 415, 310, 402. Now, this one here, 402, we didn't have when we were looking at the deal, but it was under contract, but it wasn't closed. There's another 410 and there's a 396, right? Now, this was the problem for the investors, and even was a problem for me in the beginning until I really understood where the house was sitting. And so you see these 212s, 235s. Let's look at that. Let's look at that 212. Now it's a little further away, so let's not look at the 212. Let's look at this one here on University Boulevard. Let's see what that has going on. This one is the one that intrigued me. This one here, although it has distant structure, maybe, and feel, this one here is what intrigued me to go to my investors, say, you gotta buy this property. Come look at this property, you gotta buy it. Look at it, look. Now, it's in the more elite area, but guess what? The property, subject property is as well. It just sits in between. Got to be very careful when you're in Baltimore and DC, because you have to know what community the property is a part of, so it's going to kind of get that same attention, because people know, hey, this is the back end of that community. So the community association like to keep those properties up, etc. Now, more people are not maybe not haven't sold or bought those homes in some years, but it's still a part of that community. And so look at this: original hardwood floors. It's not renovated, it's just cleaned up. Look at that. Old bathroom, bathtubs. Look at it. Nicely painted. This it's clean. Okay. Some in the basement area not finished. Panels been updated. Yard needs work. There's a balcony up there cut off. Look at this. All right. Then look at this price. 235,000. Now, I'm sitting on a deal that I'm looking at this and I'm showing my investors there's a deal. And it's 1/10 of a mile away from the subject property. And I have it on the table for 165. I could seal this deal at 165. Nobody touched it, including myself. And then guess what happens? It goes under contract in less than 5 days for $194,000. And I bet you it's with the idea the buyer that bought this knows that they can probably turn around and sell this exact, go in and clean it up, maybe spend $5,000 and sell it for $235,000. I bet you. That's not what they're going to do. Guess what they're going to do? Change that from 180 days to 90. We have no more $100,000. We remove the other houses. The only house that's still there is that one for 235. And in an as-is condition, almost the same condition, maybe a little teeny bit better than the condition of of that house, and look at all the other numbers around it from 396 up to 410. Now let me show you this 410. This is what really made me. This is me and my investors talking about this house. Look at this house. Now, one of my investors went in to say, hey, well, the archway, the way the architect and all this was going to make a difference of who may have bought this house for 410,000. But here's where I tried to argue. Look at this. It's basic. There's no open floor plan. Look at this. So my question became, could not you have went in that house and did the exact same thing as this and got at least minimum $370,000? Keeping the radiators, paint, etc. This one sold for 410. Mind you, the house, the subject property, has a garage in the back, which is added credit. It's off-street parking. The only difference might have been is the neighborhood, that the block that property sits on, I think folks were scared of. But guess what? All the time that folks were scared, and I think these folks did something wrong. They didn't get what they wanted. This property was brewing. This property later, once after we got that under contract for the 194, is now sold for 402. Now I think the reason this property didn't get higher, which I think it listed at 425, I think of some things that maybe the seller might have left out that's kind of scared some of the buyers. But I actually talked to this listing, and he said he had foot traffic, especially once he had foot traffic at 4.25, I think it was. But then when he dropped the price is when the offers started coming in. But look at some of the things he left. Look, they left gravel. They didn't even finish. So I believe that these things are the reason why that price was lower. There was a lot of things that the seller did not want to do, which caused them to not get the price that he wanted. And now he's down under 4.25. I can almost bet you if he did some of the things, he would have got the 4.25. And or if he even waited another month to sell in the spring market, he would have got exactly what he wanted. But do the math, folks. If I or my investors would have gotten the property for $165,000, even if we had to put $100,000 into it, we'd be at 265 plus closing, let's say around 185 or somewhere around there. After we can finish, even let's say we had 300,000, you have $100,000 on the back end minus whatever your closing cost expenses to close the deal. But I can almost bet you that most of that expense would have been put inside that 300,000. The person who could turn around and flip this house could make $100,000. That's my rant for today, folks. This is this that's what I wanted to rant about. I wanted to rant about we miss opportunities, and opportunities will keep that you miss will keep you poor. That was an opportunity to make upwards $100,000 on a deal. Up to 4 people missed that opportunity. They all had it in the beginning. Keep that fresh in your mind. When you're out there, you're looking at properties, anything that you do, and you got a professional backing you and they're trying to give you the information, take the sound information and move. The only way we learn anyway is through failure. So even if you failed, you probably would have failed and stumbled and made $100,000. Folks, the move you don't make, 9 times out of 10, the move that possibly could uplift your life. This is Marcellus Kendall. Hey, always come back and check me out on Wednesdays at 7 p.m. Hump Day Real Estate with Kendall. I'm signing off.